Hello, this is FX Ninja. I welcome you back to my channel, and I must say I'm very happy. I'm elated right now to have you back on my channel, because on this channel we dish out a lot of good content. And if this is your first time of coming to this channel, you want to click on the subscribe button right now, click on the notification bell, so that whenever we release a content like this, you will always be the first to get notified. Today in this video, I'm going to be showing you a lot of things that I did not even personally plan for. I'll be showing you a lot of secrets about trading. I will be showing you things that I personally do to win most of my trades, things how I analyze the market, things I do to make profits almost every day. I'm going to be exposing to you also two of my hottest strategies that have helped me to be a profitable trader up till today. I know that you are amazed and you are ready to watch this video, so don't skip any part of this video, as it is going to help your trading career as it has also helped mine. So before we go into what I have for you in this video, I will quickly want to say some things. A lot of us have been a trader for long, and yet you are not profitable. There are a lot of things responsible for you not being profitable. I want to tell you frankly today, as my subscriber, that you have not been profitable because of some certain things. And I want you to be profitable, because you being on this channel, you just have to be profitable, because that is why I'm here. And I will show you secrets. I will tell you things you need to do, so that right from after watching this video, you are going to be a profitable trader. Trust me. Now, don't just take my word for it. Some traders love to trade with indicators. Some traders love to trade just with the naked chart. Personally, I'm a trader that loves to trade with naked charts. Although if I have indicators, I use indicators too. But I prefer naked charts. So I'm going to be showing you around how you can, analyze the markets, the previous data, and use it to forecast what is going to happen in the future. Because that's the only thing we can do in trading. You need the past to predict the future. Now, having said that, let's dive into what I have for you today. Now, look at what we have before us. This is a naked chart, of course. Now, before you trade at all, before you say you want to trade, this is step index. Before you say you want to trade at all, the first thing you want to do is to look at these charts. After looking at this chart, you want to first see what is the trend of this step index. That's the first thing you want to do. What is the trend of this market presently? Now, presently, if you look at this on a 1 hour time frame, this is a bullish trend. Why did I say it's a bullish trend? It's a bullish trend because if you look at it, we are having higher highs. Okay, I don't want to use a very much term so that you won't get confused. If you notice, the market keeps forming high and high here. Okay, so it makes it an uptrend, because this high has been broken to this, and this high has been broken to form this. That is what makes it a uptrend. Now, anytime you want to trade at all, let's say you want to trade this step index, the only thing you are going to be looking for is a buy signal. The only thing you are going to be looking for is a buy signal. The only time you will be looking for a sell signal if this low here is being taken out. Let's say the market comes down and breaks this low, then you can start looking for the market to reverse. But if that is not the case, then you continue to look for what? A buy. Now, moving forward, I want to quickly let us analyze this chart. Let us look for, okay, what is the next move of the market? But let's just move back so that we can maybe analyze from here and see what the market will produce later in the future. Okay, now let's move like this. Now, I'm a fan of something. I'm a fan of what we call Fibonacci retracements. I will be starting my tutorial from there. I'm a very huge fan of Fibonacci retracement. People that knows me knows I use Fibonacci retracement a lot, and I use trend lines a lot. Now, on my channel, on my Telegram channel, I'm going to be sharing with you one of the powerful ebook that helped me in drawing of my trend lines correctly. I'm going to be sharing it after dropping this video. I'll be dropping it in my Telegram channel. So if you have not subscribed to this channel, you want to subscribe right now so that amazing content like this will not elude you. Now let's move. Now I want to quickly use my trend line to analyze this chart we have before you. As you can see, I've been able to join these three things together, three lows together. Okay, now there is another thing I want to do. I want to look at the chart again and also be able to say, okay, what has happened? What has happened? Now, let's say we have not seen this last low. Let's say it has not actually occurred. So let's move them. So what you want to do is, once you see this low and this low, you want to join them together with your trend line, so that whenever market approaches here, then you can look for a buy. Now, the next thing I want to do after doing this is to take my Fibonacci. Now, if you look at this high and this low and this high, these three, 1, 2, 3, something has happened between them. Okay, let's include this. Something has happened. What happened? This form, you can see this form a high here. There was a break in structure. There was a break in this structure here, upward. Now a break in structure upward, and the market formed another low, and it breaks it again. So what happened? What happened simply is this. Let's use our Fibonacci retracement. There was a break in structure here, so normally let's assume you did not see that break in structure. Market will want to reverse, and whenever it reverses, majorly it reverses back to the Fibonacci retracement 61.8 level. So once it retraces back to 61.8 level, you want to look for a buy at this corner. As you can see, the market bought, so the market really bought. Now this has happened, and we don't even know the next move of the market, which is why we are going to have our the market later move down, back down, and later up. Now look at what has happened here. The market has moved up, come down, moved up a little bit again. So we want to catch the next move of the market. How do we do that? I'm going to teach you this. The first strategy I'm going to teach you is to tell you the power of breakouts. Let's move down to the 15-minute time frame. Now I want to tell you something. One of the secrets I want to tell you is that whenever the market breaks out of a trend, it will move back down to where it broke out from. What do I mean? Let's see something. Whiteboard. All right. I'm going to quickly show you something now. Just a little bit patient. Now, if the market is forming higher highs as an uptrend, we want to know what we can do. When are we going to see the market reverse, or whenever the market breaks out of a particular trend line, what are we looking for? So this is my first strategy that I'm going to be showing you, and I want you to pay a very good attention, because at times it may be a little bit confusing. So I want you to pay very good attention to this. Now, whenever the market breaks out of a trend, just like what we have here, let me remove this, get this trend line out of my way. Look at what we have here. This is a nice uptrend. All right, let's take it from here. This is a nice uptrend, and as you can see, the market really trends up and later broke here, retest, and sold. Okay, sold a little. Now, the truth about this is that this area has become a major concern. This area where the market broke out is now a major concern. Is now a key level. Is a key level. Yeah. Now the candlestick that broke out this has become a key, has made it to become a key level. So you want to treat this area with a very good attention, because the market will always reverse back here. The market, after this breakout, the market will always do what? The market will always reverse back into this area, into this key zone. Now, as you can see, the market broke out and it's moving back. Of course, it's going to move back. Now, when the market breaks out like this, retest and move down, how do we know when the market will move back down to this place? Now, whenever the market broke out, of course, it will become a downtrend. Now, when the downtrend is on, you want to look at, because as the downtrend is going, it will be forming lower lows. Now, as it is going, you want to make sure the first break in structure, that is, when the market breaks out of a particular low, then you want to take your trade on the candlestick close, and that is what we have here. Now I'm going to show you a lot of examples like that. Now this is a downtrend, a very nice downtrend. And don't forget, let me take this out of the way. I'm going to show you a lot of examples. This happens over and over every time. This is a nice downtrend. Okay, the market broke out of this downtrend, and of course, don't forget, we said something. We said once the market broke out like that, that's this area where it broke out from, this very candlestick that broke it out, has become a major concern. So we are going to extend that. We are going to extend that because the market is still going to come back there. Okay, the market is still going to do what? The market is still going to come back there. I want to treat that area. You can see the market nicely came back there. Okay, so we want to treat that area, this whole area, with a very as a very important key point, key area. So that is what we have here, and you can see the market is returning. Now, once the market broke out here, we know, of course, it's going to be forming an uptrend. So whenever it's forming an uptrend, what we are looking for is a break in structure. As you can see, this continues to form a higher high, okay, and at the end of the day the market broke out here. So you want the market to break out the first low here. After breaking out this low, then we can take our trade for a sell. So let's see another okay, let's do this on volatility 10. Okay, let's see another one. This strategy works every time in the market, and you can trust me that if you master this strategy, it's going to really help you. Let's look at the 15-minute time frame so that we have a lot of trade to explore. Okay, now look at what we have here, around here. Of course, we have, let's see what's the trend of the market first. All right, we have an uptrend here. Okay, now this strategy, I'm going to even switch down to 5 minutes so that you can see that this strategy works almost all the time. I'm looking for a nicely uptrend or a downtrend, okay, that we can use for this amazing setup, that we can use for this amazing strategy. Okay, now look at what happened there. This is a downtrend. Okay, this is a downtrend, right? Now the market broke out. I said whenever the market broke out like that, let's treat that area very importantly. Okay, now this is the candlestick that broke it out. I said something. I said the market is going to reverse back to that place, and you can see the market went up and later reverses down. So whenever the market reverses down to this place, we want to be ready for a buy whenever there is a break in structure. You see there is a break in structure here. The market came down a little and later went back up. Okay, now that has happened. Let's look at another one. I told you, I said this is going to be happening every time. This is a nice uptrend too. It's going to be happening almost every time in the market. A uptrend, a break in structure, okay, market comes back to that level and went down. Okay, let's see a lot of it here. This is, remember, this is 5-minute time frame. Okay, so that you can know that this really works. Okay, it really works. So market broke out here, and of course we said market is going to return back to that point. It's still going to return back to this point in the future. Okay, it might be this that is coming down, it's still going to return back to this point in the future. All right, now as you can see, this strategy can be used on any pair, anything at all. Okay, it can also be used on even cryptocurrencies. Okay, the market price broke out here. Okay, and it formed a nicely downtrend. Okay, so as you can see, the market took a lot of time to sell and never returned back to that place because there was no break in structure. Okay, now this is one of the strategies. The second strategy I'm going to be sharing with you, it's going to be based on a strategy where we're going to be using an indicator I call the stochastic. Okay, the stochastic oscillator. Okay, the stochastic oscillator. Now this is the stochastic oscillator, but what are we going to be using this for? Okay, now let's say we have this nicely downtrend here, like what we have here. Okay, or we have this nicely done uptrend like this. Okay, now immediately you have this and another low here. You want to join them together and extend your trend line. Now we have confirmed that this is an uptrend. The next thing we want to do with this uptrend is that we want to see when our stochastic will be oversold like this and wants to start moving up. So this will be our buy. Okay, this will be our what? This will be a place where we'll buy. Now we are going to test this strategy a lot of time. Of course, let's look at the 15-minute time frame. And okay, you see this? Did you see this? Now when you have this low and you have this low, you join them together. Now you are waiting for your stochastic to be what? You are waiting for price to return back to that trend line and use your stochastic as a confirmation. Once it crosses, you can see that nice crossing. Once it crosses, you buy the market up, down, up to the next resistance level, and you have won that trade. Okay, now you don't want to take this trade, and you don't want to take this trade because the price have not returned back to what? To the trend line. What you want to do is that you want to make sure that price return back to this trend line, and then you can buy. Now if you are finding value in this video, you want to click on the subscription button right now and you want to subscribe to this channel. Okay, I'm going to show you another powerful thing when it comes to trend line. Okay, let's say for example over here you saw these two lows, you join them together. Okay, as you can see, price broke out here, return back to that place. That's our first strategy. But right now what we want to do is we want to use, let's take it on boom and crash, which I know a lot of people will be so excited to have. Let's see it on boom and crash. Let's see the strategy on boom and crash quickly. All right, before you can use this strategy at all, you want to make sure that you know how to draw trend lines, which I have promised that I'm going to share with you an ebook on how to draw trend lines. Now if you see the market, let's say you just saw the market like this, make sure you join the high levels that you are seeing. Just join them together and extend what? Extend your extend your trend line like this. Just leave it like that. Okay, just leave it like that. Let's see if you have more of this. Okay, this is another one. You want to extend your trend line like this. Just extend it. There is no crime in that. So now this is 1 hour time frame. Let's go back to the 15-minute time frame and see trades that we can take using this powerful strategy. So I'm going to insert my stochastic right now with settings. Okay, now I'm good. Now what I want to do is this, very simple. Okay, you want to scalp the market. Since you have joined this and this together, now what you want to do is you want to scalp the market, and you know, whenever your stochastic is crossing, okay, you take you know how many candles you've taken here, 15-minute time frame, you take it down to the next resistance, to the next support, sorry. Now look at what happened here. Price touched this, but this does not cross, and it did not reach the oversold region, so you don't take it. This is another trade. Okay, so price crossed, the stochastic crossed. You can see what happened to price. It fell down really well. This is another trade. You see that the stochastic, you want the stochastic to cross before you take your trade. It crosses, even if it is 2, 3, 5 candles on a 15-minute time frame. My brother, you've really made a lot of money. So that is how this strategy works. Okay, it's a very, very good and nice strategy. Also, I want to quickly show you more on this. Let's look at crash. Let's look at crash 1000. Okay, this is crash 1000. This crash 1000 has been selling for a long time. Now this is a downtrend. This is a downtrend. No crime. Take your trend line like this, and of course you can see what is really happening on crash 1000. Now if you want to have more trades, more opportunity like that, just go down to the 15-minute time frame. Okay, go down to the 15-minute time frame. You're gonna see something like this, and if you're able to draw your trend line, then you can of course attach your indicator. That's the stochastic indicator with these settings. Put it on, then you can see you want to take your trade whenever price hits the trend line, and of course you can see here you have a trade here, price hits the trend line, and there was a nice drop there. All right, also you can see this price has hit the trend line and there's a crossing here, so you're going to have a nice drop. But majorly people prefer to scalp. If we prefer to scalp the buy on on crash, they prefer to scalp. But if you want to do this, if you want to use this strategy, make sure that you draw your trend line correctly, just like what we have here, nicely done. Okay, so that each time, of course, once you have these two places, each time the market returns back, you want to take your trade and you buy crash. Okay, you can buy it from here, you buy to the next resistance. Okay, each time it touches like this and you see a cross, you buy to the next resistance. So you're going to make a lot of money using this strategy. All right guys, let's look for more examples. Look at this, what we have here. Okay, so that is how this strategy works. It works on any time frame, it works on any pair, works on volatility, works on let's click V75. It works anywhere in the market. Okay, that's just what the strategy is all about. You hope you note the two strategies that we have taught right now. Okay, I said something. I said when you open the chart like this, you look at the direction of the market. That's where is the market trending to. Of course, this is a downtrend now forming to be an uptrend, and if you see V75, it has really sold well. Okay, it has sold well, and a breakout, a retest, and we can see what is happening. So this retest, this place it retest has become an area of concentration, because in the future market will always return back to that place. The market will return back here where it broke out, especially the market will return back here. So whenever it returns back, we want to make sure we have our focus there. Okay, this is V75. As you can see, this level is a very key level. V75 is returning back to an uptrend. Like I told you, that whenever there is a uptrend like this, okay, and there is a breakout like what we have here, you should be rest assured that market is going to 90% of the time market is going to return back to that place, this very place. Okay, this is where price broke out. Okay, so our V75 is coming here. Okay, it's is going to get there. All right. Now this level, this zone is a very key zone. Market might get there and reverse. Okay. But before you trade the market will reverse, you must make sure that there is a break in structure. Now let me quickly include this on this video. I want to actually tell you something. I want to input something that a lot of traders they always want to use, and that is the use of indicators. The use of indicators. Now, a lot of us are very used to indicators. Of course, let me just put one of my indicators here. Okay, no, let me remove this. Let me remove this. Let me put the ninja indicator. Very used to indicators, but most indicators are working, but we tend to use them the wrong way. It's not showing on the charts. We tend to use them the wrong way. I want to show you the best way to use indicators. Whenever you want to use indicators, there are ways to use indicators. There are ways not to use indicators. All right. Okay, now none of the indicators are appearing on the charts. I'm going to try my best to include an indicator right now. Okay. Okay, these are my indicators. I'm trying to find an arrow that you can use to do this right now. It's something I want to quickly point out to everyone watching this video. When it comes to indicators trading. Okay, I'm going to come back and explain more. Talking about the use of indicators. Indicators are very good. It's a very good thing to use indicators. But whenever you are using indicators, use it with caution. There are things, when we say indicators is only helping us to indicate that something is coming up. Okay, let me attach this. This is the Ninja Volatility indicator. Okay, now many a times people tend to use indicators blindly, which is what I want to quickly point out from this the rest of this video. So now, majorly, whenever you are using indicators, you don't just want to leave your indicators alone to do the work. Okay, don't leave your indicators alone to do the work. Many a times people attach moving averages, which is good. You can attach moving average. Let's say you attach moving average 60. Let's make this to be white. Okay, because we have a black background. Now, if you attach moving average 60, it's a very nice moving average. So all you want to do is, whenever price is trending up, you take the buy signals alone, like this. Okay. Whenever price is trending down, you take the sell signal like this and like this. Now, but many a times, whenever the signal appear, we just want to take the trade. Many a times we make a mistake that whenever the signal appears, we just want to take the signal almost immediately. That is not how to trade with indicators. So I'm going to be removing this moving average right now, and I'm going to show you the exact way to use indicators. Okay, now this is the last signal we had here. Okay, it's signifying a buy. it's signifying a buy. Now the first thing you want to look at is what is the trend of this market from here down here. What is the trend? Of course, it is a downtrend. It is a downtrend. So before you pick a buy, you know that you want to trade against the trend, which is not advisable because the trend is always what? The trend is always your friend. So you don't want to take that signal. Okay. Now the next thing you want to look at is what is the essence of this buy. If this market is going to buy, what is going to happen? The first thing that is going to happen is that there must be a candle close above the previous high. There must be a candle close above the previous high. If there is no candle close, then that means the trend is not ready to change yet. Okay, before this this was a buy. Okay, that was a buy, and it gives some pips because there was a candle close here. This candlestick closes here. That's why you have a little buy up till this resistance. Okay, there was a little buy up to this resistance because there was a candle close. Let me zoom this a little. There was a candle close here, okay, with little momentum, and that's why we see price rally down to this resistance here and later fall back down. Now after this happened, the market came back and sold, and of course it sold well. Why did it sell? Now it sold because look at here, there was a signal pop up here that this market is going to sell. You don't take the sell almost immediately. If you take this almost immediately, price can reverse and turn back to an uptrend. You are going to look for why. Whenever an indicator appears like this, it's telling you there is a sell opportunity. It is not telling you that you should sell. No, it's only telling you to look out for what is sell opportunity. And of course, you can see the market goes up here, come down, goes up again. So we want price to take out this neckline. Okay, we want a candle close below this neckline, and the candle that will be closing below it should be having good momentum. We don't want to take a candle like this. If you see a candlestick like this closing, then you know, or a candlestick like this one, those ones doesn't have good momentum. But if you see it like this one that closed below, of course, this is signifying that the bear are ready to take over. And you can see what happened. Price sold, came back to retest this neckline, and sold very beautifully downward. So if you have any indicator that you are using, you want to use the indicator with a very sense of price action, not just using the indicator. Let's go down to 15-minute time frame. Okay, now when you have a chart like this, the first thing you want to do is that you want to draw your trend lines. Draw your trend lines. I'm a fan of trend lines. Draw your trend lines. Okay, draw your trend lines. Know what price is saying. Okay, this is a nicely breakout, a retest, and price is going up there. You see that? Now look at this signal here that makes price to really sell down here. Now if you look at the chart very well, you will see that there is a double bottom. Okay, shapes. There is a region here. Okay, personally I don't use indicators for resistance and supports. I draw my resistance, I draw my supports by myself. Okay, I draw them manually. I don't use resistance and support indicators, and that's the best way to trade, guys. That's the best way to trade. You don't just want to be a lazy trader. Okay, open your eyes and draw all these things yourself. Stop using indicators to use for them to map out resistance and support for you. Okay, most indicators won't even take days. Okay, now you see this signal here. Look at this signal here. Okay, from here we know, okay, this is a touch, this is another touch here, this is another touch here, this is another touch here, and that area keep resisting price. Now we now have a pop-up signal that the market is going to sell. Are we going to sell immediately? If you sell immediately, because this arrow pops up, then you may be in loss, because price may decide to break this region and move back. But what you want to do for you to for you to have at least a guarantee that, okay, the market is going to really sell, is for you to look out for the breakout, for a candle close below this low here, this previous one here. You want to see a candle close below it. Okay, now this is the candle that closes. This is the candle that closes below it, and you can see it's a very nice this is Marubozu candle. It closes below it, and of course market really sold. This is 15-minute time frame. You'll have taken some profit. That's like you'll have taken some profits before this zone stops the market and makes the market to start trending up. Okay, look at this signal too, the buy signal, and of course we know this is a support region, so price forms a W here, and very easy. Okay, we are looking for a candle close above this high. Okay, a candle close above this high. We have this candle close, which is a very nice one. So, and if the indicator pops out here, that means, of course, we already have several candle closes. That means it's a nice buy, because there have been a break in structure here. There have been a break of structure here. So you don't want to take your indicators blindly. Look at this. Don't just use indicators blindly. Look at how price broke this previous low here. Of course, this candlestick is not valid. This is the candlestick that broke this low. Okay, and you can see how price sold down. Now there is another thing I want to show you. You can see how price beautifully broke that support line. Why did price broke the support line like that? Whenever you see price approaching a support line like this, a support region like this, and just carefully look at the candlesticks. Okay, look at how price was approaching the support with very big candles that have good momentum. Look at this candle, look at this candle. That means price, the candlestick were not even afraid of this region, so they came down and broke it. You can see they were forming a very a good candlestick with almost no body. They don't really have bodies, you can see, and price sold down very aggressively. So this is how you want to use any indicator that you are having. Okay, this is how you want to use them. You don't just want to use them blindly. This is the same system we have here. Okay, that is why we have this good rally up here. Now there are times whereas if you are trading this system, it might even be a breakout. Okay, it might be a breakout like what we have here. Okay, it might be a breakout. If you draw your trend lines correctly, it might be a breakout, and you want to also wait for a break in structure. And mostly this indicator is very, very powerful, especially if you are good, a little bit good in using it with price action. Okay, if you can use it with price action, you really enjoy the indicator. Let's look at another pair. Let's look at this. You can see what the indicator is doing on this pair. Okay, it brings a sell signal here. You won't take that sell signal because price has not broke anything. Okay, you won't take the sell signal, but you can see here price broke through the sell signal, and oh my god, look at what we have. So this is a ranging. You don't want to take any ranging signal like this. So even over here, price was preparing us for a sell. Okay, all we just need to do is to wait for a break of this previous low. Okay, a break of this previous low, price bounce on it, broke it with this very huge candlesticks, and of course there was a retest and price sold nicely. So you want to take cognizance, of the candlesticks, how the candlesticks are forming, the candlestick that broke the line. You want to take note of that also. You don't just want any break like that. Okay, let's look at more trades with this indicator. Okay, price gave us a sell here, so you need to look out for it. Why the sell? What happened? Okay, there was a breakout here. Okay, you see that there was a breakout here. So what's which candlestick broke the trend line? Look at the candlestick that broke the trend line. So if this candlestick broke the trend line, then we know that the bear are already here, so you can take it and you can see what happened. So you want to pay attention to what kind of candlestick broke the uptrend or broke the downtrend. So you don't want to trade just blindly. You want to trade with caution. Okay, you want to trade with caution. All right, so we have a breakout here too, and you can see what happened with price. All right, this is another one. You can see another breakout here, and you can see what happened with price. Okay, so you don't just want to don't just want to say you want to take trades on indicator just like that. So quickly, let's look at another chart. This time around, let's look at volatility 50, or let's look at the boom and crash markets. Let's see crash 1000. This indicator works on any of the markets. It works on them only if you can trade using what I taught you. I've taught you right now. I've taught you how to trade with with using price action. You don't just want to trade blindly. Let's go to 5-minute time frame. All right. Okay, we have a sell signal here. We have, look at the various sells we are having, but all those sells, you don't take them because this low has not been taken out. That's why whenever we say trading requires that you have a lot of patience. Of course, price is asking you to, the indicator is asking you to sell here, and of course it's asking you to also buy too. So but you don't want to take the risk of buying when we are on a sell trend. Okay, you're on a sell trend, so you are looking for crashes. You can see crashes, consolidations here, and more crashes. So you want to first of all look at what the trend is saying before you do anything. So there was a sell signal here. Of course, we look into this, and yeah, we sell after the closure of this very candle here. We sell, and you can see what happened. We also have that there is a what here? There is a buy signal here, but we will not take it because this trend line here is yet to be broken upward, and at the same time it's telling us there is a sell signal. So we just draw this simple like this. Okay, very easy to trade with boom and crash. You can see this candlestick broke it out, and we have a sell. If you want to trade with this indicator, you have to have a swing trading mind. Okay, you have to have a swing trading mind. You don't just want to take it just like that. You can see what we have here, a breakout, and that was, you see, you swing the markets. We have another signal here. What happened here? Why did this sell? Should be the first question that will come to your mind. Why is this sell signal? You don't just want to take it because it's saying it is sell. So very simple. You look at this neckline that was broken. Okay, it was broken with this candle, and the indicator is saying we should sell. So you put your stop loss behind the arrow. Okay, you sell nicely. Not much sell. Wow, you had a very huge sell. Look at how the market sold. Okay, this is a downtrend, so you don't want to treat it anyhow. You see this break, a retest, and a nice sell. So this indicator is also good, very good for trading boom and crash, but you don't just use it if you are not a trader that is patient. Number one, if you are not a trader that has a little knowledge of price action, and you can spot all these things here. I want to take us on another journey of right now on boom and crash. Boom and crash, is a asset that truly, let's remove the indicator now. Is boom and crash, like I was saying, said boom and crash, it's an asset that really respects price action, and it really respects the Fibonacci that I was trying to teach you the other time. It respects Fibonacci a lot. You can see whenever it gets to the 61.8 or the 50 retracement level, it respects it. So if you have a downtrend like this, let's put it on 30 minutes time frame. If you have a downtrend like this, what you just need to do is you want to know when the market will reverse, right? That is the essence of you using the Fibonacci retracement level. You want to know, okay, price is coming down. You want to know when price will retrace and keep selling again. So that is the essence of your Fibonacci. So to use the Fibonacci is very simple. Just know the trend, the trend of the market. Once you know the trend of the market, then you can go and wait for the market. All right. Something is currently happening on boom 1000. Boom 1000 has been on a sell trend for some days now, and it's really been respecting the Fibonacci retracement. You can see I've taken a lot of trades on boom 1000. That's given us a lot of profit just using Fibonacci. Even despite the consolidation, that's given a lot of profit just using the Fibonacci retracement on a lower time frame this time around. Majorly on 5 minutes. The Fibonacci retracement has really been helpful. So we know it's a downtrend. So whenever it spikes up, we are always ready for it. Whenever it spikes up, we are ready for it to spike down to our area of interest, like the 50 level, like what we have here. Look at it. Price spiked down, sold, then spiked up. We just put 61.8, and what happened here? After price came to 61.8, we took our trade. A trade can be taken here after this break. Okay, we have a little bit drawdown, but we have a nice sell here. Okay, now that's a trade for you. Currently we are continuing on the sell. The sell is being continued, but majorly most of the sell you have them respecting your Fibonacci retracement, like what we have here. When price got to the 61.8, it reverses back and you can take a profit from here. I shared a strategy on this on our channel, on our YouTube channel, on how you can take at least 30 to 40 candles trading reversals on boom and crash. Yeah, you can go up and look up to that video. All these are things we all can do and profitable in the market. So I want to quickly let you know that we offer free signals on our channel. We also do give out indicators. We offer free signals. We offer premium signals also, and we have strategies, very powerful strategies that you can use to trade boom and crash. Subscribe to this channel, turn on the notification bell. We have a lot of amazing content that we're going to be dropping as time goes by, so you don't want to miss any one of them. All right, guys, I think from this video you'll have been able to get one or two ideas on how you can be a profitable trader. Now you want to keep practicing whatever we have discussed here. Okay, this is volatility 50, and it's been consolidating. They've been trapping sellers, and they've been trapping buyers, and price refused to buy for a longer period of time. So you don't want to even go there. So I've taught you a lot of things in this video. So kindly subscribe, turn on the notification bell. Keep learning and keep practicing. Okay, if you fail in a particular trade, it's not the end of the trade, and it's not the end of the world. Continue pushing it, and one day you also be a profitable trader. Most importantly, make sure that you don't back down. Make sure you don't back down. Continue trading continue, even if you're going to be demo trading, just continue making it up, and the sky will be your starting point. I'm FX Ninja. I have been able to dish out some things to you here. If you would love to maybe contact me for anything, I'm available. Okay, you can just look into the description of this very video and you'll see how you can contact me there. All right, we have a Telegram channel that is doing very well. We have mentorship programs currently running. We have some other indicators and systems that people have been using and they have been profitable. So from my hand here, I'll be signing out. Thank you for watching this video. I'll be coming your way again with more amazing content, even better than this. So you want to also subscribe and turn on the notification bell so that whenever we drop amazing content more like this, you'll be the first to be notified. Okay, thank you very much for your time. I am FX Ninja. Take note of everything I have taught. Take note of the trend lines. Take note of the Fibonacci retracement, and I also told you about the Stochastic Oscillator, how you can use it to catch trends. And also I have taught you how to use indicators so you don't trade blindly. So thank you for your time. I've told you here how you can use this indicator. Don't trade blindly. Make sure you allow a break of all these lows before you take your trade. Thank you once again. I am FX Ninja. Thank you for your time. God bless you. Before I go, I would like to let you know that you can also be part of our mentorship program. That is, if you are interested, we teach you how to trade profitably. We take you on classes on Zoom where we teach people how to trade profitably, how to read the charts, how to read the markets, how to trade profitably, in short. So thank you very much for your time. Thank you for watching our videos. Make sure you subscribe, you turn on the notification bell, and we'll see you on the other side. Thank you once again, and bye for now.